Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value Finance, like you can see in the back there. I'm going to look through Twitter, see what Twitter's got for information, just kind of randomly look at what people are posting, what people are putting up for charts. We'll take a look at all this, and I'll give you my financial opinion as we go along. So let's dive in. Let's take a look, see what's going on. So if you guys want to add me and you want to see what I'm watching, it's at finding_finance. If you want to join me on Twitter. So looking at this, we'll come on down. It says URA in relationship to the CRB index. This is Uselink. I had him on the channel, and is Casper. And here's one of the ratios. And basically, this green line is where there's a bunch of support. We're back in that support level. So in his opinion, it's a second chance to be looking at URA because we've pulled all the way back into that support zone where we have a potential, we'll call it a potential spot for picking up some cheap shares in URA. So uranium is looking good. We also did a technical analysis update. We did we're starting to see some bullish engulfings that are happening in uranium, and hopefully this is bullish. Hopefully, again, these are all statistical probabilities. They're not for sure outcomes, but we do know that uranium's cheap. Looking at this URA to CRB index, we know uranium is cheap in relationship to other commodities. So uranium does look very good, very tasty right here is what I'll call it for looking at it. Another person, Zero Hedge, put in the bond market is saying the Fed is done. What it means is we've seen some 10-year yields pull on back, and the bond market, which is basically accumulation of it's an accumulation of all the banks basically trading with each other and buying bonds and whatnot. If they know that the Federal Reserve is done raising rates, what they'll do is they'll start positioning in bonds. And we've seen a decline in the bond yields, signaling that someone is buying bonds. Maybe they're done buying bonds, and that's what the bond market is signaling, potentially. This is a guy, I thought this was kind of funny. It says, fun fact, Michael Saylor might be the single worst investor in history. He lost more money than anyone else in the dot-com crash. Now he is underwater over $1 billion on the best performing asset of all time because he timed it wrong and bought the top with leverage. That very well could be the case. Very well could be the case. I'm not stating either way. What this guy has done is stated facts, and Bitcoin could be the worst investment of all time if you'd purchase it at the top, and we could be at the top where that will never, ever recover again. I don't necessarily know. I'm not making that claim, but it is possible. Here is Josh Young. Increased energy consumption is driven by reducing poverty. We use a lot in developed markets. There's a lot more energy demand to grow in developing countries. And here's the United States and their energy consumption per capita per year. So we're way up here on the right-hand side. China's down over here. India and these other guys, they're all over on the left-hand side. And if we want to reduce poverty, it's going to have to be driven up this energy consumption curve. And the rest of the world outside of the United States and a lot of these developed countries have a long way to go to reach levels anywhere near the United States. And I'll be honest, guys, I don't think it's possible that they can reach it. We'll run out of energy in terms of oil and fossil fuels. And I don't know if we can make it through renewables. That is a debatable stance. To put things into perspective, government bonds are on course for the worst year since 1865, Bank of America says. This is the World Government Bond GDP Weighted Return Index, 2022. So annual returns, at least for 2022. I don't know where they'll end up, but this could be some of the worst ever. Thought that was interesting. So that's a huge rotation of money, if you think of it from that perspective. Coming on down, it says that everything sell-off continues, energy bids. So I know a lot of people, they think that energy's done poorly, and it has the past couple of weeks, but overall, it's still done very well in relationship to a lot of other assets. Ethereum and Bitcoin and ARK getting hit on the face. QQQ, SPY getting hit. The bond market down 20%. Silver down. Platinum down. Gold barely up. Uranium up quite a bit, 20%, and then oil up 43%. Coming in here, this is Scott. He posted History Rhymes, 1970s versus now. And what he's looking at is the fractal from 1970s in relationship to the fractal we have today. Could we come back down a little bit before I move higher? Very well possible. Could we hit that $18 mark? It is possible. And then we had a massive bull run in the 1970s after we kind of had that lead in, so to speak. Is that coming ahead of us? Difficult to say, but the fractal comparison is there, and it looks pretty close in terms of that comparison. Here's AGHLEXK. We have, here we go. It says, false breakdown with the bear trap and a positive divergence. Perfect. And these are, can't really see these too well, but there's 3 charts. And what he's saying is it's a possible trap. You go just below the support line, you go just below it, and then we call it a slingshot cheetah. This is called a bear trap. It's the same thing. And what happens is you get the people to basically stop loss out. People go short thinking that we're going to some deflationary period, and then they all get caught on the wrong side. And it reverses very hard on them. Kind of like pulling a slingshot back and launching it higher. Is that going to be the case? We'll find out. Again, I'm not in any sort of camp here. I like precious metals in general just because it's out of the system. It's an inflation protection thing, and I think we're very early in all of this. And the short-term chart reading is the least reliable, but it is there. It could be a trap. We are throwing bullish engulfings on a lot of the mining companies, meaning that we could move on higher here. So there is validity to this from a candlestick perspective. So it's just interesting. Here's one that I retweeted. The era of easy money is over. In 2022-2023, we will have a final deflationary event before inflation continues its journey upward, north. And this could be that recession. Who knows what we call it? Maybe it's already done. Maybe it isn't. A lot of people can debate all this. But what you want to come away with is, are the fundamentals good for a higher move of inflation? I think the answer is yes, with the energy crisis that we are embarking on. So I think this is probably right. The size of this pullback is unknown. It very well could be a decent sized pullback, potentially. Well, no one knows. But I'm staying long. I'm going to use this as an accumulation method and time for a move higher. So this is the United States government bond 10-year yield. They're using the yield in this particular case where we could have a potential pullback in the yield and then a launch higher where the money starts to rotate quite large amounts. That's why this yield would go higher. So they're saying breakout, pullback, and then boom, gone. In this particular case. In the middle of summer, when we should be saving as much natural gas as possible for winter, European nations are burning lots of gas for electricity generation. The UK is now generating greater than 60% of its electricity output burning gas. We will come to regret it this winter. Go renewables. In bear markets, stocks return to their rightful owners. I think that's funny. Great quote, JP Morgan. Here's URA. It's a start. Need to clear 1950 for the reversal confirmation and for a test of the yellow upper trend line wedge resistance. And he's just talking about this diamond pattern where we could potentially break in a double bottom. That's what these two little cup formations are. Double bottom there, and then the break higher. We do have a bullish engulfing on a candlestick perspective of the last trading day. That is bullish for a move higher. Hopefully that's the case. Again, I'm kind of done with the whole short-term prediction thing. I mean, I'll still do my videos, guys. You've probably kind of heard me kind of release off, but when things get down like this, I just buy it. I hold on. I don't really think too much about it in terms of trying to gain in the short term. I'm trying to buy as many assets as cheaply as possible and ride this 5-10 year bull market in energy. And commodities in general, I should say. This is John. It says, buy me. This is Bannerman. I agree. I like Bannerman quite a bit. Again, we're on that trend line coming on up. And then, he thinks maybe a, 69%, 70% discount off the high that we've had here, that it's pulled back. We do have an increasing stochastic coming on up, and we'll see if this is the bottom. Again, I'm not calling bottoms. I know, I'm looking for potential buy points. We do have on a daily, this is a weekly candlestick basis, on a daily, a bullish engulfing. So it's possible that we start to rocket higher here. This is electricity rates are up about 6 times in Germany. Look at your own electric bill and imagine it going up 6 times. And tell me you wouldn't be freaking out. That is almost a mortgage payment or rent at that point. And this is their baseload electricity in euros. I don't know what the heck's going on over there. I don't know if they're doing this on purpose to their people. Renewables obviously haven't worked very well for them. And I don't know why they're shutting down nuclear power plants and whatnot. None of it makes any sense to me. Here's JP Morgan. It says JP Morgan analysts warned that global oil prices could reach a stratospheric $380 a barrel if sanctions prompt Russia to inflict retaliatory crude output cuts. That's crazy. And it actually aligns kind of with what I think may eventually happen. I was thinking, a 1 to 10 ratio, a 1 to 6 ratio, somewhere in that range for gold to oil. And if gold goes to $3,000 an ounce, a 1 to 10 ratio is 300. It's possible to get to some level like that. It's possible. I'm not saying it's likely. I'm just saying it's possible. Must be close to a low in precious metals now, since the number of persons behaving like a bot troll is rapidly rising again. And I agree with that. Everyone is in their bearish camp and they're acting all whiny. Guys, this is what markets do. They get to a low. Everybody gets all whiny. They get all blah, blah, blah. And then I'll be in there buying stuff. That's what I'm going to do. That's how you make money. You buy it when everyone else is whining and acting like a jerk, so to speak. It says those selling energy stocks on recession fears and demand concerns clearly are not grasping the depth of the global supply problem. This is among the tightest I've seen it in my 20 years in the business. And I agree. I don't know why anyone would sell anything energy related in a market that is this tight. And I think the fears that are out there are overwhelming the people that are long this stuff. And I'm not doing anything different. I'm staying long. Inventory drawdowns, strategic petroleum releases. They're trying to completely manipulate the price of this stuff. I just think that there's no way that you're going to separate me from my positions in energy. It says total recoverable oil worldwide is 9% lower than last year, threatening global energy security. Yeah, it's true. This is Eric Nuttall. It says some days it feels like shouting into a hurricane, but truly every day above $100, that's $100 West Texas Intermediate, is a win. Stocks are discounting $50 crude oil, and everyday free cash flow is building. Q2 results, in my opinion, to be spectacular, with ongoing share buybacks and dividend increases. The day-to-day will be what it will be, which means the day-to-day movements. And we've got a lot of these over here are in my investments for a lot of stuff for the cheap enterprise value to cash flow. Their multiples are so ridiculously cheap. Cracks are starting to fall. This is the crack spread. This is your refining margins between oil and gasoline. So they're starting to fall, which means that oil can go up, the crack spread goes down, and your gasoline price stays the same. So I think that's probably what's going to happen over time. As oil becomes more short, your refining capacity starts to go up. What that means is you're not using your refining capacity to 100% because you don't have the oil to feed into it at some point. And that's going to come. And then you're going to see prices go up dramatically of oil. At least that's my take on it. Here's mind-blowing free cash flow coming from the oil sector. SM Energy is one of the largest free cash flow. Same with CPE, Callon Petroleum. Those are some of my cheetahs out there. CDEV is my other one. These guys are going to be printing money. And those are some of the most profitable companies that I own. They're one of the largest in some of CDEV, SM, and CPE. And there's a bunch of other ones that we own all on the left-hand side over here. Just absolutely ridiculous the free cash flow yields coming out of the majority of my investments that I've got in oil and natural gas. And if you guys haven't checked out Commodities Bull Market Recession Thesis Update, you guys should check that one out. It's a pretty good video. It basically describes the thesis of the channel and where we are in that thesis. Same here. It says there seems to be this obsession with the 8-year cycle low in gold for 2024. Aside from this being subjective and having little predictive value, last 3 major lows in gold were 7 years apart, 01, 08, 15. Guess what? The summer of 2022 low is the major low many assume is coming in 24. I agree with a lot of these guys. You guys, here's the thing. I don't try to predict this stuff. I do use technical analysis to try to time my purchases, but I don't try to predict it. As long as the ratios are cheap, I buy it and then I ride it. It's literally that easy. I don't try to sit there and try to time every single movement. I'm not trying to avoid 40 or 50% pullbacks because they're going to come no matter what. That is part of the market. That is part of being in these commodities. So what I do is I just buy it when the ratios are cheap, buy it when the technicals look good. You try to time your purchases as best you can. Sometimes it's very difficult to do in the short term. And then I ride it for the big long-term bull market. It's really that simple. And if you need help doing that, the description link in my website, which is in the description link below, can help you do that. In the Platinum membership, you can ask questions. We have a question and answer session Sunday, 7 a.m. Mountain Standard Time. We have that coming. And that's where you can ask your questions. But it's the biggest thing here is buying when things are down, buying when things are cheap. We use ratios to tell us where what's cheap and what's not, and getting the correct companies, which will give you that asymmetric bet with the leverage to the upside. There is negatives with that because the more leverage a company is, you can get some downside movement as well. So you can try to time your purchases your best. You do a little bit of cost averaging in. That's exactly what I do. And all that. You time your purchase as best you can, as best as I can. You cost average in at a very low level, and then you ride this thing higher. And it takes time. Sometimes they drag along the bottom for a while. Sometimes it takes a couple of years for it to play out. I've been buying platinum since 2019. Now I'm positioning for a large move in the future. I am positioning for that move. So that's my strategy, and that's how I'm working it. And we very well could be having a pullback here. We had a first wave, a pullback, and then a big third wave comes. That's where all the money's made. You got to be in it for the third wave. Could that happen? Could we have a very swift, short pullback? It's possible, yes. It's possible. So I'm going to end it there, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, the Platinum membership below. And that's all I've got for today. So we'll catch you next time. This is Finding Value.